If you're moving to Dubai but still own property in the UK, understand that you will become a non-resident landlord. And that means you will have different set of tax rules to follow than when you were living in the UK. If you get this wrong, your letting agent could start withholding rent, or worse, you could face penalties from the HMRC. In this video, I'll show you how the UK's non-resident landlord scheme works, how to rent out legally from abroad, and what steps you need to take to protect your income. I have helped many UK landlords relocate to Dubai without losing money because I helped them set up the structure properly. I'll explain to you how to apply for gross payment status with the HMRC, what forms you need, and how to file the right way once you're living in Dubai. Before we start, my name is Shiraz Wahid, and I've helped hundreds of business owners and families move to Dubai, set up their business, and legally reduce their taxes. And if you want my help in doing the same, you can book a strategy call with me at setuphero.com/call. You can rent out your UK property after moving to Dubai. But the key is understanding how the UK treats rental income from non-residents. This is where the non-resident landlord scheme comes in. And if you get it wrong, you could end up overpaying tax or triggering penalties. As soon as you move to Dubai and become a non-resident for tax purposes, HMRC sees you differently. You're no longer taxed on worldwide income, but if you still have UK rental income, that income is still taxable in the UK even if you live abroad. The mistake that many people make is thinking that once they're living in Dubai, where there is no personal income tax, they no longer need to report the UK rental income. That's not true. HMRC will still expect a tax return and the UK property income remains within their tax net. Now let's talk about how the non-resident landlord scheme works, or shortly known as NRLS. It was created to make sure HMRC still receives tax from landlords who live outside of the UK. Under this scheme, either your letting agent or your tenant is legally required to deduct basic rate tax from the rent before passing it to you. That's currently 20%. So if your property brings in £2,000 a month in rent, you'd receive only £1,600 unless you register under the HMRC's NRLS scheme and get approval from the HMRC to receive your rent gross. And this is the part that most people miss. You must actively apply to HMRC to receive your rental income without the tax deducted at source. Once approved, you'll still declare your rental income in the UK as self-assessment return, but you'll get the full rent paid to you upfront. This is important because once you become a Dubai resident and a tax non-resident in the UK, your income tax situation shifts. You want to manage it properly so you're not leaving money on the table. Receiving rent gross gives you control over the rental income and is managed, claimed, and taxed properly. Let me explain to you how you actually apply for it. You use a form called NRL1. This is the application for individuals. There's a different form for companies or trusts, but most of our viewers will usually use NRL1. You will fill it out and send it to the HMRC with details of your overseas address, your properties, and your letting agent or tenant details. HMRC will then review the request and issue a notice to your letting agent confirming that you can receive the rent in full. This process usually takes a few weeks. Even once you have approved to get your rent in full, you are still required to file a UK self-assessment return each year. That means declaring your rental income, expenses, and any profit. You pay tax on the net income. And if you have moved to Dubai and have no other UK ties, this rental income may be the only taxable income you report to the UK. Now let's cover a few common issues that people run into. First is not registering for the non-resident landlord scheme at all. This means that your agent has to deduct the 20% tax whether or not you're actually due to pay it. Second is forgetting to file a tax return. Just because you're in Dubai doesn't mean you can skip this. And the third is that assuming you can offset Dubai tax against the UK tax. There is no personal tax in Dubai, so there is nothing to offset. You must pay UK tax on the net rental profit. If you have a mortgage on the property, you can deduct only the interest portion of the mortgage from your rental income. That's another change many people aren't aware of. Since 2020, mortgage interest relief has been limited and is now only available as a basic rate tax credit, not as a direct expense deduction. Another point to remember is the potential for capital gains tax if you sell your property later. Even if you're non-resident, the UK can still charge capital gains tax on UK's residential properties. You would have to report the sale and any gains to the HMRC, usually within the first 60 days of the sale completion. So your Dubai tax status doesn't give you a free pass on property sales either. Now let's also touch on the compliance burden. Being part of the non-resident landlord scheme means you need to stay on top of HMRC rules, file on time, and keep the records of your rental income and cost. This includes things like service charges, repairs, and letting agent fee. If you have multiple properties or higher income, you may even need to do a quarterly reporting under the Making Tax Digital, depending on future HMRC changes. Now, what about inheritance? If you own a UK property while living in Dubai, your estate could still be subject to inheritance tax in the UK when you pass away. Being Dubai based does not automatically exempt your estate. That's why many expats look at using offshore trust or other planning tools to manage their exposure. At Setup Hero, we also offer trustee services for this exact reason, especially for high value UK property owners who are moving to Dubai. If you are thinking of exiting the UK system completely, you will also need to consider residency ties. Things like the UK bank accounts, pension, and the time spent in the UK can affect your tax residency status. The statutory residency test is the main rule book, and it's important to check your ties carefully. Living in Dubai gives you massive tax advantages. There's no personal income tax, no capital gains tax, and no tax on rental income from foreign properties. But if your property is in the UK, it's still under the UK tax law. The solution isn't to avoid it, it is to manage it properly through the non-resident landlord scheme. If you're planning to keep your UK property while living in Dubai, you need to apply for a gross payment status early, file your annual returns on time, and make sure that you're aware of what deduction you can make and you cannot make. That way, you will stay compliant and keep more of your rental income. Setting up your Dubai company, residency, and banking, and help with exiting the UK's tax system, you can book a strategy call with me at setuphero.com/call. We'll go through your specific situation and build a clear action plan that works for you. And if you're serious about using Dubai for your business and asset base, you should really check out my next video right here.